Greetings, guys. Good evening. Depending on where you are, it might still be afternoon. All right, I'm gonna get started. I don't want to keep you guys too long. There's only 11 people on here right now. Based on the amount of people that monitor the stream, I was expecting a little bit more, but I'm keeping the stream open, keeping the floor open for you guys. There isn't really anything specific that I wanted to go over. I do know that it's been a while since I've done a YouTube video, and I kind of want to get into doing live streams on YouTube. So this is the first one I've ever done. And let me know if there are quality issues or sound issues or anything like that. I do know that YouTube does have a slight delay when you're streaming on live, so not really anything I can do about that. But before we begin, please like and subscribe if you guys like this. And at the end of it, if you continue doing these, if you like doing these and seeing these live streams, I am going to try to make it the consistent thing, possibly even 2 to 3 times a week, depending. So I'm gonna slowly build into that. Right now we're doing our first one. Eventually I try to make it, twice a week, and then we'll go into doing it 3 times a week. It'll mostly be focused on just market review and really anything trading and market related. Obviously no live trading due to the delay in the streams, but we already do live trading on Zoom anyway. So let's get started. We can actually start off with a quick review of today, and just so far what's been going on since Monday. Last week I basically gave you guys my outlook on this coming week, and I expected a bounce right off the lows from last week and how Friday closed. I was pretty bullish on the market and was definitely expecting a nice bounce. Gave you guys Tesla 220 calls on Friday that I called out in chat. Those printed, I think, 500%. If you took 230s and 240s, they printed almost 10 bags, I believe, since Friday. But we saw a move with that. We saw a move in all the indices. NQ, we had a beautiful bounce from Friday, and we are now up about, where is this, 930? We're up about 100 points, almost 200 points. We saw a high of about 300 points today from the open on Monday. And today we executed really well on QQQ, just utilizing my NQ levels. You guys know that I trade NQ very often. I actually don't even trade ES anymore. The only time I trade the S&P is by trading SPX and utilizing my ES levels, but I actually don't trade ES anymore because I fell in love with NQ. The volatility that you get from NQ, the types of movement that you get from NQ, is just way more fun trading futures on rather than ES. So that's me personally. It's not for everyone. It is very volatile. If you're not being precise with your entries and you're not being accurate and with your trading plan, you can get easily stopped out, or you may not know when you're supposed to exit or enter a trade, right? This is why I provide you guys with levels. So with the levels, we basically, I decided, since I'm already trading NQ, I might as well just trade the Qs, right? So we took trades off QQQ today. First 3 trades were all bangers. Easy 20-30% scalps in the day, and we finished the day within 45 minutes. And I gave you guys, basically, during the morning pre-market session, I said in chat around 8:30, I said, you can short, right? And it was based off this tweezer top that I saw on ES on the 30-minute. So if we actually go here, where is it? Right here. This tweezer top on the 30-minute. Okay. So based off what I saw on ES on the 30-minute with this print, I say you can likely short it. And that was at 8:30, before an hour before the market opened. That was around 15:108, I believe, on NQ. Right around this area. Okay. For those that trade with me in my group, you guys know you take NQ anyway, right? With me. So if I say you can short, and I'm referring to some structure or pattern on ES, you can essentially do the same thing with NQ. All right. And then once the market opened, we took QQQ puts, which is basically based on the assumption that this 077 level of mine was going to break. We have a little bit of a bear flag forming here. For the first 5 or 10 minutes, NQ was actually lagging a bit behind ES. ES was already dumping. NQ was actually bouncing during the time. Retested this zone here, this supply zone, and then rejected and waterfalled. Okay. So that was the first trade. Gave you guys a target of 15,047, which is right here. and we took profit there. Obviously, it went lower to our second level, which is the 01850 level on NQ. But this was a great scalp. I had my trading plan in place already. I was targeting 047, and then we took profit there. Not long after that, was it down here or here? I believe it was here. Or here. Yeah, right here. Right in this low. I set to long 15001, right? 99250 is basically your next level down. I told you guys to long 15001. Ended up providing another 50-point move. I believe we also took QQQ calls right here, 366 calls, and we printed on that as well. Took profit, moved on to the next thing. All right. So it's been pretty good execution today, and you know, we were able to capitalize on these moves within the first hour of the market, and that's an ideal day for me personally. If I'm able to capitalize on moves within the first hour, I hit my daily goal. Whether it's my daily goal is typically 3%, but you guys have noticed I pretty much aim higher, mainly just due to the fact that I don't focus too much on the P&L anymore. I just focus on what I can trade and whether my execution is on point or not. Because at the end of the day, if your execution is on point and your trading plan is there and you have everything, all your boxes checked, you will inevitably be profitable. It's a fact, okay? And even if it becomes a losing trade, you're not caught up on it because at the end of the day, you know you had a plan in place and you follow that plan. And by plan, I mean you had your targets, you had your position size, you had your analysis, you had your stop loss and validation point. So even if you do get into a trade and it doesn't hit your target, and let's say it becomes a losing trade and gets stopped out, you can't be upset at it, right? Because you follow your rules and you follow the plan. You set your stop, you got stopped out. No biggie, move on to the next opportunity. Now, the problem with that arises when you start changing and modifying things mid-trade. Let's say you have a stop loss in place, you have your targets in place, then sometime while you're holding the trade, you end up changing your stop loss. Now you're lowering your stop loss to provide you with more room. When in reality, if you're looking at the chart and your analysis, you may be wrong, right? Or maybe the market turned around and didn't go in your favor. Now you're actually just adding more risk to the trade that you're in, rather than just cutting it and waiting for another opportunity to reload that same trade if the analysis still holds. Okay, so very simple stuff today, and I'm glad we were able to capitalize on all that. Sorry, I didn't realize it was so dark, so turning the light on. And when we are talking about SPX here, I'm going to do a clean chart for you guys. Market has pretty much retraced since the time I said euphoria, if you guys remember that day. And we had a key level up here that I named checkmate, which was the 45.98.53. I'm just going to label it here. Okay, this was that checkmate level that I had. And ever since we retested it that day, if you guys remember, we took puts right off that level. This was near the end of July 27th. If you guys remember that day, it was actually a phenomenal day for trading. We actually walked away for a bit, saw the retest here in the afternoon, and then we took puts right off this level, right off the 45.98.53. Okay? And from that, we shaved off about 60 points, 70 points. Since then, we have never seen that level tested again, 45.98. So there is a reason why I named the checkmate, and that was the right at that level was where the Bank of Japan BOJ news came out. Okay, right into resistance at a key level. So since then, we still haven't tested that level, but we have been able to see a bounce from Friday's lows. And I'm still expecting a little more room up, but we do have a couple major things. Number one is going to be the NVIDIA earnings report tomorrow. We can dive a little bit more into that later, but that should be a huge mover in the market. Obviously, NVIDIA has been getting slammed with calls. We can also review the flow with that in a few minutes. But that's going to be event number one. Number two is Jackson Hole. JPAL gets on Friday. From Jackson Hole, he's going to be streaming. Happens every year. This is a conference where all the global economic leaders come together and discuss like global economy, inflation, rates, all of that. This is going to be a key event to watch out for. It's going to be very volatile on Friday. So for me personally, it's going to be risk off. I'm going to be sizing light as I typically do on 0DT, but especially for Jackson Hole, I want to make sure I'm managing my risk. Now, the last Jackson Hole from August of 2022, which is down, I think it was right here. Yes, this was the one. All right, so from the last Jackson Hole, we shaved off about 150 points in a single session. Okay, again, it happens every year. There's no, Jackson Hole is not something new. It's scheduled the same time every year, same way as FOMC is at 2 p.m. Right? So we kind of had similar price action where we kind of dumped into mid-August, and then during that week of Jackson Hole, we kind of rebounded until the day of Jackson Hole, and then we gave everything back again. So this is something to watch out for. I'm not showing you guys this to become biased and assume that this is going to happen again this year. Just something to watch out for in terms of volatility. If you guys actually look at previous Jackson Hole years, I believe we rallied in 2021 and 2020. I don't remember. I have to look at the charts. Yeah, I think it was this day. Yep, Friday, August 27th. So we actually rallied about 40 points on the day, on Jackson Hole day. I believe the same thing in 2020, we rallied. All right. So again, you guys know how I trade, level by level. Doesn't really matter. I'm not trying to assume something is going to happen one way just based off one data point of last Jackson Hole. But as of right now, you know that the trend has turned bearish short term. Okay. If you look at the macro chart, we've pretty much broken trend. We have some gaps that we can fill to the downside as well. This area is actually going to be pretty key. I can actually go back to this chart. Let me just put it here. All right. We're going to focus on this low. These are not the specific levels I have. Just want to give you guys a clear-cut view of the chart on a naked chart. Once we break this low here, this is going to be pretty key. All right. And your next pocket down that will act as support is going to be this range right here. From the beginning of June, early June range, which puts us right below 4,300 into the 4,270, 4,280 range. All right. So these are some of the things that we're watching out for. Obviously, like I said, the two major events that we need to keep our eyes on for this week, NVIDIA tomorrow and in Jackson Hole. Okay. Now, in terms of what I expect for tomorrow, I do think that we can still see some upside. Likely tomorrow's upside pivot is going to be 4,400. Okay. And the downside pivot will be 4386.75, depending on where we open up tomorrow in pre-market. But this is what I'm expecting. All right. So far, we bounced right off the GP from the low of yesterday into the high of today at open. And we were able to close back above the 4386.75 level, which is also the weekly upside pivot that I gave you guys for this week. Okay. So long as we hold that, we can still see some upside into 4,400, 4,411. The market has actually been providing some great opportunities this week in terms of the indices, especially even Monday. You guys know that recently, besides the last couple of weeks, I would say things started to turn around. But prior to that, Mondays have been the worst day to trade indices. I mean, it's just chop all day long. Lots of range-bound action, no real momentous moves. And we started to see that turn around for the last couple Mondays, and especially yesterday. Great price action to trade. I mean, it's heavy volatility, but you want volatility, right? Especially for those who are trading indices, 0DT, you want volatility, you know, and you need to find your levels, you need to find your ranges. Once you're able to do that, you just execute based on those levels, right? So, for example, yesterday we gapped up, we popped a little bit, we dumped, gave everything back, retested my 4361 level right here, key level that we have. And then once we got that, we rallied again towards the close. Okay. And we actually saw new highs into 4407, 44. And that's where we rejected. All right. And now today, same thing, pretty much we gapped up, then we dumped, gave everything back, retested the weekly upside pivot of 4386.75. And I even said in chat, around 12 o'clock, I told you guys, the afternoon is probably going to be pretty boring. And it was very boring. We traded within a 14-point range the entire afternoon. Even less if you just consider how much time we spent down here Okay. Now we can discuss NVIDIA. Now, in terms of NVIDIA is a little engine that could. Non-stop bull run for NVIDIA. We saw a break of all-time high today, right at the open, and it pretty much gave everything back. What's interesting about NVIDIA is that NVIDIA has been having some really bullish days. And when I say bullish, I'm talking about 8 to 10% days. Insane. And I really want to play ER on this. I really want to play earnings, but I know it's such a huge risk right now. And I'm not sure what direction it's going to take. I'm going to be honest. You never really know with earnings. What we know is that, number one, based on the data that we do have presented in front of us, is that previous all-time high was broken and rejected immediately. And this is not a small rejection, okay? NVIDIA dumped almost 30 points from the break and rejection of the previous all-time high. All right. Now, if you actually draw this out, we have also broken back below the bull flag. Okay, we're looking at this on a daily. So this is going to be interesting to see. If we actually take a look at the inverted chart, there is a possible tweezer top here, even on the monthly. We still have 9 days left for the monthly, but this wouldn't be such a pretty close on the monthly if we did close like this. Okay. Now, if we focus on the flows, NVIDIA has been getting slammed with flows for months. This is not just a recent thing that I'm seeing. They've been getting slammed with it for weeks and months. Now, what I typically look for when it comes to looking at flows, this is how I caught Netflix last year when I bought puts and we printed over 1,500% overnight on the Netflix ER when it dumped all the way to, I think, 250 or something like that. The way I look at flows is I want to look for outliers. I want to look for things that are coming in that are super out of the money. Things that you know, if they don't hit, they're 100% going to zero. Okay? That's what happened with Netflix last year. I believe if we take a look at the Netflix charts, what was it, 2022, right? Was it this ER? Yes, it was this ER. I don't remember if it was this ER in January 22 or if it was this one. I know it was one of these that we called the big dump. I'm pretty sure it's this one. Okay. I'm just going to assume it's this one because I forget. So what I saw when we looked at Netflix last year for earnings, I saw huge out of the money puts coming in. And when I say out of the money, I'm talking 30-40% out of the money. When Netflix was trading at 300, you saw $200 puts coming in. And they were decent size, you know, anywhere from 50,000 to 100,000 per trade. So these types of flows catch my eye, right? These are the things that I personally like to look for and that appeal to me, because these are the moves that realistically you're not going to see Netflix dump 30%. So something must be negative or so unappealing to investors in the earnings reports that's going to cause a move like that. So that's what I was trying to look for today on NVIDIA. If you guys actually take a look at NVIDIA, it's been getting, like I said, it's been getting slammed with calls, even if I just put the premium a little higher. Wait 1 second. All right. It's been getting slammed with calls. Something is different about this. Volume over OI. Let me turn that off. Okay. You're getting slammed with calls. You have a lot of $500, $600 calls coming in for August, for September, much further out. But you're starting to see some of these super out of the money puts coming in. For example, 250 puts that just came in today before the close for January. Actually, I didn't even see these earlier. 250 puts for January that came in. Pretty cheap, 270, not a bad lotto to play, honestly. A little too far out, in my opinion. But 58K on that. We can click this to open it up. Yeah. 216 contracts bought right near the close. Yeah. 58K position. You have 360 puts for September 1st, 400 puts, 280 puts, 370 puts. You know, these are the things that catch my eyes. I don't really care too much about the $500 calls. The 500 calls, I mean, we're pretty much there. And I feel everyone is waiting for 500 to hit to short it. And in my opinion, it's going to go one of two ways. Either it's going to straight send way above 500 on earnings or even after, or no one's going to get that opportunity to short 500 because it's going to dump before that. So those are two scenarios that I'm thinking. But we're starting to see a lot of these flows coming in now. September 15th, 350 puts, right? Some pretty decent OI on this. I mean, it's increased about 40% over the past month in terms of OI. So these are the things I'm looking for. Here we go. 150 puts for next December at the ask. 300 contracts swung. Yeah, open and swung, and they're still open. So you have to ask yourself, why would anyone buy $150 puts at the ask? Realistically, it doesn't really make sense, right? I mean, can it print? You have a this person has an entire year for this to play out. It can definitely happen, but the risk reward just isn't really there for me personally. I would never take 150. I wouldn't take something that's 300 points out of the money, even if it's a year long. It just doesn't make sense to me. Right, but you're starting to see some of these things come in this week. 300 puts for December, 375 for September. You get the gist of it. Okay. Now, my suggestion and plan is if you guys do want to play NVIDIA, my suggestion, I'm going to give you three options. I'm going to give you guys three options. So one is going to be taking 9/15, September 15, 350 puts. That's the one I'm personally eyeing. Haven't decided if I'm going to play it yet. The other option, number two, is going to be taking AMD as a sympathy play. Number three, actually four options. Number three is going to be taking QQQ, either a swing or you can take it and sell it before 415. Okay. And option four, you just don't play it and just wait to play the results after. Okay. Typically, your best RR is going to come after ER, not during ER. But obviously, if you're a little bit of a gambler, you kind of want to try to, play ER and see what you can get out of it, then obviously you can try to swing a little degen play for tomorrow. Okay. Any mention of AI would most likely pump the video though? No, I actually don't think that's going to be the case, to be honest. I think they've mentioned AI more than enough in their previous ERs for it to not really have any impact on the price anymore. So I think most people are going to be focused on, their revenue and their guidance for next quarter. But I think everyone can agree that this is overvalued. Fundamentally speaking, it is overvalued, right? How far we're going to dump, I don't know. We have a huge gap, and from 365 into 306, that's about a 20% gap that we had from the last ER. That doesn't mean that we're going to fill that. Okay, it doesn't mean we're going to fill that now. It can mean we fill that in a few months, a year, whatever the case may be. But what I want to focus on is, number one, as I mentioned earlier, the hard rejection off a new all-time high. We scraped new all-time high by 2 points. It wasn't much. We had a hard rejection. We're now trading back below the bull flag. Okay, and this could potentially, we get back down here. This could potentially break down from this structure. Okay. Obviously, it's not going to look like this for ER if we do end up getting a large move. But this is what I would expect long as we stay under this bull flag. If we do end up reclaiming this, then I'm a little bullish, right? But again, these are all based on what's going to happen with ER, and then we can decide from there. All right. So I'm actually going to open up the floor a bit to you guys. And if you guys have any chart requests, I can look at it. If you guys have any questions, I'm open to answering them. I think I pretty much covered what I wanted to cover. Tesla was a great call out on Friday. Stupid me, I missed this on Monday. I think I was focusing on SPX. But I missed this. I wanted to take it right at the bell, and I completely missed it for some reason. But even if you took, 230 calls at the open. I think it hit maybe 200, 300% by close, if not more. But the structure, when we traded Tesla on Friday, it was very bullish to me, which is why I was, willing to hold a 0 DTE lotto, whether or not it went to zero, just based on the fact that I felt bullish on it. The chart was bullish, right? You get this low swept. I'm going to do everything on this naked chart to show you guys. You get this initial low swept, okay? Now down here, right? Immediate bounce right back into the range and a reclaim of the level here. Okay? This is bullish. This is the backbreaker low. This is a 2B, all right? This is the point where people are starting to short based on a break of this just to get stopped out once it reclaims it. This is bullish. And then throughout the day, you kind of built some consolidation range before the move actually happened the week after, okay? And this is also what people like to call the island bottom. Island bottom is basically this structure down here with two gaps on either side. You have a gap here, you have a gap here. It's a bullish structure. You reverse it, all right? Even if I do inverted chart, this is typically what people call island top, okay? It's just a structure that was built from a previous gap. You get another gap, continues the trend, all right? Let's see. Can you give us potential NQ setups? You can play SMH for sympathy too. Yes, you can definitely play SMH for sympathy. If you guys don't know, SMH is the semis ETF. You can definitely play that. It's all dependent. If you don't have the risk appetite for anything for earnings, just don't play. Just sit on your hands, have fun watching it after hours, and then just execute on it the next couple of days. I think that's the best thing. All right. Potential NQ setups for tomorrow. I am bullish on NQ long as we are holding this demand zone for tomorrow. I'm gonna draw it out here. Okay. Long as we're holding that, I'm bullish. For me, the pivot level is likely going to be 15.01850 up here. We break about above that, we're going to retest 047 again, 077, and 104. Okay. But break of this structure here, you're likely going to test sub 14,900 again and below that. But we did reject the fibs right up here today, right in the morning around the 15,120 area. And it also lined up with the volume node that we have here. So you can see how the velocity of these moves up and down mimic each other, right? Cock and balls, your traditional cock and balls. Faster it goes up or down, the same way it's going to come right back up or down. Why? Because there's no support in between or resistance in between. What is your medium and longer term outlook for the market? Medium term. I'm going to assume medium term is more so towards the end of the year. Is that correct? I'm going to assume it's towards the end of the year. For medium term, towards the end of the year, I do think we can likely see a little lower in the indices. I do think that we've been pretty topped out. We can revert back to the mean. Honestly, long as we hold, even if we retest this area and we hold it, we're still bullish. I don't even think we're going to see that low, to be honest. We're likely going to be testing this box once again around the 4270-ish area and then get another bounce and might even retest his local high around the 4598 and go higher before we see another downside move. Now, there are a few things that I'm watching. One of the things is COVID. You guys know that I added Pfizer to the watch list for this week. There are starting to be a lot of headlines about the new variant, Eris or Iris. I don't know how you pronounce it. Lots of headlines about that with global spreading and cases in the US, now cases all over the world. And they're expecting that to be the dominant strain. And they're also saying that it's more likely, it's most similar to Omicron. And if you guys remember, Omicron was the worst variant that we've had so far, I think. That might have been like the first or second variant after COVID actually happened. So that's why I'm watching. This is why I felt a little bullish on names such as Pfizer and even Moderna. If we actually take a look at Pfizer, it is not on this chart. Take a look at Pfizer. This 3454 level is a historical key level. Okay. Throughout this entire range since 1999. So this is a key level that, long as we hold above this, we should be able to get a bounce. And this kind of lines up with the entire COVID situation at the moment. Now, obviously, you can look at these as fear headlines. There are lots of rumors now saying that they're bringing back mask mandates. There are actually a couple of colleges that have already reinstated mask mandates. And it's required now for all students to wear it, and faculty. So these are things that you kind of want to watch out for. I don't think anyone really knows the severity of the variant yet. I'm not really too worried. Just putting it out there so you guys are aware. But the data that I was tracking was the number of hospitalizations and admissions into the ICU. And we've been pretty much rallying on those data points the past month. And this pretty much goes in line with the variant. My uncle actually got COVID last week, or a couple weeks ago on his birthday, unfortunately. And obviously they don't know which variant it is, but we're assuming it's a new one because he said that he felt like absolute crap. So we'll see what happens with that. But just things to keep in mind. This is one of the reasons why I like PFE, not just based on the chart, but based on the macro news as well. All right, now longer term, in terms of, I'm going to say a year or so. Let me just go back to this chart. For a longer term, I don't really have an answer for you now. For longer term views in terms of 1 year plus, I typically spend a lot more time researching and analyzing things and put out a paper. I didn't do that this year, but I can probably do that for next year, and then you guys can stay up to date with that. I don't normally like to just call out what I think is going to happen in a year unless I actually put a lot of time and effort into that research and analysis. Then you'll get a full detailed report of what I expect. You guys can read my 2022 analysis from January, and where I call the bear market, and that will give you some insight into what I mean by when I say I do a lot of research and analysis before I put out a macro view. But for short term, I do think that we can pull back more into the end of the year and then go from there. The Netherlands is also in recession. Another thing I wanted to note was that, all the banks and Powell and the Fed are now saying that they no longer expect a recession, right? But they also said that inflation was transitory a couple of years ago. I remember that. You guys remember that? Because I do. Now 3 years later, took a while, but now they're saying that the recession, they're not expecting one. And I don't know. I'm not really sure if I believe in that. Do I really care if we get a recession or not? Not really. I mean, you'll be able to see it in the charts anyway. But just things to think about when you're looking at it from a macro perspective and just your daily life. All right. Thoughts on Mara? Take a look at Mara. Okay, Mara. I don't like the pullback in which it retraced 100% basically from the rally. I gave you guys Mara right here. Right in this area. That was a beautiful watch this ad. That was back in June. And Mara rallied about 100% on underlying contracts. I think I gave you guys like 13 calls or 14 calls. Those printed heavily within an entire month. What you don't want to see is this entire thing coming back. Whoops. So now what you want to pay attention to is whether or not 1008 holds again, which you guys know, if you remember, 1008 was a key level that I kept using within this entire range. Long as this holds and does a bullish retest, it's going to take some time to structure out first. It may even do a quick backbreaker low below that, reclaim, and then send again. But this is something you want to watch out for. You also want to keep an eye on coin. Coin, same thing. Not the best looking chart. Whoops. This may still have some room to go. Okay. May still have some room to go. Even if we come down to this demand zone, might provide better RR right around here. Okay, so let's see with that. Yeah, Myrna's getting a run up lately. Same thing with what I mentioned with the COVID stocks. Although I feel now that I look at it, Myrna was definitely a much better play than PFE was. But yeah, this is definitely something you want to keep an eye out. Myrna, your key level is going to be right here. Okay, this 115.61. You need this to hold above this level, this key level here, in order for continuation. There's going to be a lot of resistance on Myrna now. Okay, you guys know that we've been trading in this range for over a year with Moderna. You guys know that I've been watching Moderna on both sides of the trade for quite some time. And we finally got the breakdown that I initially wanted to see way back. And then now we're trying to reclaim that range. And we go from there. This could be that backbreaker low. Starts to look a little bit more like a Wyckoff cycle now, to be honest. This could just be a huge time range of accumulation down here. And this area here may just be the spring. So keep an eye on Moderna. May get some nice trades in for this for the next few months. Basically aligning with Pfizer to the watch list. Any questions? Any other charts you guys want me to look at? Again, if you guys have been enjoying this content, please like the video and subscribe to my YouTube channel. I'm not the best at constantly putting out weekly content, but I'm working on that. And hopefully I can do more of these live streams. Any other charts you guys want me to look at? Bad idea. AI forming an absolute cup and handle. All right, I'll take a look at AI. AI doesn't look the best at the moment. Don't like the fact that it broke this entire structure here. Trying to reclaim. I would honestly like to see AI retest a little bit lower before I can look at this for calls. Tesla, I went over already. You can take a look at Tesla once we're done with the stream on the recording. You can take a look at Apple, sure. Apple, all right. Let's take a look at Apple. 175.15 key level. You guys have some levels here. Actually, this is not with the updated chart. Let me go to... Here we go. Okay. Apple needs to reclaim this supply zone here, which is the same zone that I gave you guys last week when I said to watch for shorts on Apple. We finally broke down from that. Now it's trying to reclaim. This is going to be a key area, guys. If we're not able to reclaim this, and this ends up being a bearish retest, this is likely going to test lower again. Okay? So key area for that. This is going to be a heavy resistance area now for Apple. Just on a macro view. Okay? But we need to get above this local zone. Hopefully see a bullish retest. Ideally, you want to see a bullish retest if you're bull on Apple and then reclaim. Okay? That's the type of action you want to see. Otherwise, if this ends up being heavy resistance and this becomes a bearish retest, we're going to retest 175 again, likely bear flag on that, and retest the lows. VRT. Doesn't sound like a ticker that I'm familiar with. This is not something I'm familiar with and not something I would chase. Do a quick analysis on this. Got a little bit of a bullfly breakout here. You got your all-time high right here. I don't know what they do. I'm gonna look it up. Data center. Oh, it's utilities. Where's my charts? Oh, it's utilities. I didn't realize. I'm gonna add this to my utilities watch list because I never had this one. Well, let's take a look at XLU then. We're gonna look at utilities. Not sure how much percent holding XLU has, but VRT still looks pretty bullish. I'm just not one to chase this here at these highs. Actually looks kind of topped out. Yeah, this looks a little topped out. I do think if this can actually hold below the 35.38, this is the inverted chart. I'm going to put it back to normal. If this can actually hold below the 35.38, I think this is shortable. Goes right below the fibs, below 35.38. Yeah, this can definitely be shortable, long as this confirms. Take a look at path. Longer term trend line you have down here. If path can get back above this range, I'd be a little more inclined to take any long positions on this. If we take a look at a macro view, yeah. Path has a lot of resistance that it needs to get through for this really to confirm any longer term bullish outlook. Otherwise, this can still be a bear flag that plays out into new lows. I mean, on a macro level, this is not a chart you would want to be an investor, realistically. Okay. So for a longer term view, you really need this to at least get above this area here for any chance of continued upside. Roku. Roku looks pretty good. Trend is obviously still up. You can see that we're still printing higher lows throughout this entire bounce in the past year, right? You have your initial low here back in December, which was pretty much the bottom on tech. Higher low, higher low, higher low, higher low. Okay. And now you have your key areas right here. So long as 75.12 holds short term, you can likely expect another bounce to 87.34. This gives up, the 75 level gives up, you're likely going to be testing back into the mid 60s range on this. But this looks pretty good. You just have to understand that this is going to take some time to structure out. This is a huge range that it needs to get through. All right, we traded within this range for about 4 or 5 months. Okay, so there's gonna be a lot of resistance here. You notice top of the range lined up perfectly with the key level that I had here. And we got the rejection off that. Likely gonna take some time to structure out before it does its next leg. Any other chart requests? Oh, thoughts on cat. Cat's out of the bag. Cat, very nasty rejections. I would like to see this gap fill here. But we are now at all-time highs. Likely going to be a bearish divergence. Oh, no, it's not, actually. Nice. Yeah, cat looks decent. Actually, I do want to, now that you mentioned cat, I do kind of want to look at the Dow. Okay. Keep in mind with the Dow, this is going to be relevant to your cat request. Keep in mind with the Dow, 341 is a key level I've had on here for almost a year and a half now. This is the level that I pretty much watched the entire time. If you guys remember a few months ago when I was comparing tech to the Dow and essentially showing you guys where the money was flowing and how we caught reversals on tech by looking at QQQ over Dow or DIA over QQQ. And it was based off this 341 level because at the time, the Dow was still lagging behind the entire market. If we do end up breaking back below this level, this is going to be key to watch for anything Dow, okay? We get back below this 341 level, you may want to be a little more cautious here and watch this bear flag break. Right now, it looks pretty bearish at the moment. Keep an eye out on this, all right? And that will pretty much translate into, you know, your CAT, your BA, your Dollar Tree, Dollar General, you know, Costco, all those types of stocks. No, I didn't go over BA. I can go over BA if you like. BA. BA got a nice pop here. BA is likely going to take some time to range. This isn't your range now. All right, 222 to 243, about 10% range. This is your range now. Okay, so this is something to watch. BA obviously looks extremely bullish. I've been bullish on BA since I think June or May when I gave it to you guys on the watch list to watch out for. We pretty much got the move that I was expecting, but I had higher targets into 270. I think it's on this chart. Here we go. I had higher targets into 270, and this analysis and the add to the watch list was based on using time and price and comparing it to the range that it traded during COVID back in 2020. Okay, similar time and price range, and the breakout. We didn't exactly get the same move from then, but this is starting to break out of this range here, and we can still likely test the highs around the 270 area from 2021. But this will definitely need some time to structure out before it breaks out again. Roblox. Roblox looks disgusting at the moment. Really disgusting. I haven't even looked at Roblox in a while. Yeah, Roblox looks pretty disgusting here. Throughout the entire range, it's pretty much been rejecting the fibs. I'm going to put it back on to show you guys. Okay. It's been rejecting the fibs the entire time on every attempt. And now we have broken a macro bear flag. So this does not look good at the moment for Roblox. So a couple of things to keep in mind is the all-time low here, which was created and printed last May in 2022. But this doesn't look good. Airbnb. Yeah, I think I'm pretty sure I gave you guys Airbnb my bullish sentiment on it a while ago when we were trading in the 120 range. This 124 level needs to hold. I'm bullish on Airbnb long term, but I don't like how the chart looks at the moment. So this may see lower if it breaks 124 and honestly retest the back end of this range. So I would wait a little bit. You can set alerts. If it breaks below, then you know it's likely going to test 113 again. And again, some of these charts can all turn into bear flags, guys. You need to remember that. Some of these charts on a macro level can all become macro bear flags. Okay? And that will coincide with whether or not the market continues to see downside based on the macroeconomics and everything else. Cool. All right. I want to do a little bit on I don't want to keep you guys too long. I think we're just about an hour now. I want to do a little quick note on trading psychology with you guys so you guys understand that trading is a numbers game. Okay? You guys really need to understand that. Trading is a numbers game. When you're executing any type of trade, you need to have a plan. Okay? You need to understand what your plan is, what your analysis is, You can have an analysis, but having a plan is something entirely different. Okay, you can't have an analysis without a plan if you're planning on executing. The whole point of having a plan is to let yourself know, all right, this is what I'm going to do with this trade. This is what's going to happen and what I'm going to do if it doesn't work in my favor. If it does work in my favor, I have my targets in place. I'm managing my risk. My position size, I know exactly what I'm going to take in terms of sizing and stop losses. Okay. When you're taking trades, such as when I provide lottos, let's say you're up 1,000 on the day, or let's say you're up 500 on the day. Let's just use 500 as an example. If you're up 500 on the day and I give you guys a lotto and I tell you it's 50% stop loss, do you think that your position size for that lotto should be $1,000? No, right? Because if you do that and you use a 50% stop loss, then you're basically back to break even. You're up 500 on the day, then you take the lotto for $1,000 size, you use the 50% stop loss, you lost 500 on that trade, you're back to break even on the day. Doesn't make sense. Logically, it just doesn't make sense, right? And based on numbers, it doesn't make sense. So you guys need to learn how to mitigate risk more and manage your risk using simple numbers. If you're up 500 on the day and you're taking a lotto, then your position size shouldn't be no more than 200 if you're going to use a 50% stop loss on that. This way, if you do get stopped out, you lose $100, which is about 20% of your profits on a day, but you're still up $400 on a day, right? Really no money lost. Okay, these are things that you guys have to think about when you're mitigating risk. And some of you guys are a little like too emotional, and I'm only saying this because I want you guys to learn. It's easier said than done in terms of handling your emotions and handling your discipline, but the ways that you guys can get used to that more is, number one, stop with the hindsight stuff. Stop looking back at your losses. Let's say you took a loss today. Don't let that translate into tomorrow. Tomorrow's a new day. You took a loss. It's normal. Everyone takes losses. I take losses. It's inevitable for you to take losses, right? The whole point is that when you are taking losses, you're mitigating your risk so that your losses don't outweigh your wins. If you're up consistently $500 a day, or we can use percentages, 5% a day or 3% a day, and all of a sudden you have one day that you're down 20%, well, guess what? You just wiped out like 4 days worth of gains. It just doesn't make sense, right? So the same way that you have rules and discipline for when you're green, you should have the same rules when you're red. You should have a daily threshold for daily stop losses, right? This is the max I'm willing to lose before I walk away on the day. This is the max I'm willing to win before I walk away, or this is my threshold, right? These are rules that you guys should be writing down and really embedding it into your head and coming to the day fresh every single day. It's all about execution with your trades. If you're going into every single trade without a plan, then you're not executing well. Like, be real with yourself. You're not executing well. And that's going to bite you in the ass because you're going to end up making decisions during the trade that you didn't expect to make before you got in. You're going to start changing your stop losses. You're going to average down. You're going to, sell early or take profit early, right? These are things that you have to think about and plan out before you enter the trade. This is why when I give you guys trades, I always try to give you guys an analysis as long as time permits. If the time doesn't permit when I give you guys a trade, I usually do it while we're holding a trade. But this is why I always provide you guys with a reasoning and stop losses and targets every time I get into the trade, because that's my trading plan. Right? That's what I've planned out for this trade that I'm taking. And for you guys to see it is so that you guys understand what I'm seeing. And it doesn't always have to work out, right? Like today, the lotto. Why do I label it as a lotto? Why do I take smaller size? I took one contract on that Webull account that I'm running now. I didn't even take it on my main account. I just took one contract on the Webull account. Why did I take it? Well, because during the time the chart looked pretty good for a bounce. But why did I label it a lotto? Because I still didn't have enough conviction. Right? I didn't have enough conviction to make it a normal size trade. And this way, if it doesn't work out, then I'm not losing much, right? I'm risking $20 a contract, okay? These are things that you guys should be thinking about when you guys are trading. Do you use 50% stop loss with most of your lottos? It all depends. I think there are plenty of times where I give you guys lottos and it's like a 30% stop loss. Mainly because it's due to the fact that I know our entry is such a good entry that we don't need to risk 50% if we don't have to. So let's say I'm buying pretty much near support on a premium chart. I'll use a 30% stop loss, right? Because I know that if that breaks, it's going much slower. So there's no point, you know, adding another 20% risk to it. But the most important thing with lottos is that I always size based on that. So for example, if I'm going to use a 50% stop loss on a lotto, I'm going to size so that the 50% loss is similar to having a 20 or 30% loss on a regular trade. This is the type of math that you guys should be doing. It's very simple, it's very quick. So if I take normally, I don't know, let's just say 1,000 per trade, okay? That's my normal size, right? If I take a lotto, I'm gonna take anywhere from $200 to $500 on that size. I'm not taking 1,000, okay? Because if I do a 50% stop loss on a $500 size, that's 250 bucks. That's similar to doing a 25% stop loss on a $1,000 size, right? Simple math. That's how you mitigate risk. Now, the whole point of the lottos is that when I say lottos, it doesn't mean that you don't take it and it's high risk. Yeah, it's obviously higher risk, but you mitigate that risk by sizing lighter. The whole point of a lotto is that you just size light, hope, and our purpose is to capitalize on that, right? We have lottos that hit 200%, 300%, 100%. Your whole point is to capitalize on that RR. You're not risking much, but if it prints, it's gonna print, right? It just adds an extra couple of percentage points on the day. All right. There was something else I wanted to talk about in terms of emotions, but I forgot. You guys need to come into the day every single day refreshed. Okay. The reason why I'm talking about all of this is someone specifically has been hammering me with messages, and like I've been giving advice day over day, and I'm still getting the same questions. So I'm pretty sure you're on stream, and this is going to be directed towards you and everyone else. You can't let your losses translate into every single day. Okay, just let it go, accept it. All right. But if you're not putting any work in to work on why you had losses, why you took losses, why you made mistakes, and why you fucked up your trades, you're not going to improve. That's the reality of it. What's the point in sulking every day and like thinking about how you fucked up and how you made these mistakes? Use that as motivation. Okay, I know I messed up. I'm going to make this shit back, right? I'm going to make all these losses back, but let me figure out what went wrong in the first place. If you just constantly think about your losses every day, that's not productive at all. You're not going to get yourself anywhere. In fact, it's pretty unproductive, and it's going to put you in a bigger hole. So this is something that you guys like really need to remember. I mean, I take losses too. There are times where I take big losses, but I don't let it translate into my next day. Will it bother me for some time during the day? Yeah, it can. But I know what I've done wrong. That's the thing, right? I recognize the mistakes that I made during the day. I recognize the mistakes that I made for that specific trade. Okay, I journal them. And the next day I come back refreshed, look for new opportunities, and just execute based on that, right? There's no point in sulking and constantly thinking about your mistakes if you're not doing anything about it. If all you're doing is thinking about your mistakes and like putting yourself down and saying like, yo, I can't, oh man, I can't get over the loss, I can't believe I did that, blah blah, you're not getting anywhere, and there's really no point in doing that. I mean, you're wasting so much energy on that where you could just be putting it towards improving. Okay, and this is just reality, guys. Like, a lot of trading is a psychological, emotional game. You could be the best technical analyst, you could be the best person at charting or reading flows or understanding how premiums move or anything like that, but if you don't have your emotional discipline down and the psychology down, you're going to make the same mistakes as anyone else would. Okay, the whole point of being better at these things is that it helps you control your emotions more, right? The more knowledge you have in terms of how to read a chart or how to read flows or how to do anything to help you find confluence and execution on your trades, the less emotions are involved, right? Because you have data points that support your thesis. Now you just have to execute on them. Okay, so these are things that you guys have to think about. I think that's all I wanted to say in regards to that. I don't want to keep you guys too long. Any questions for me? Let me go back. You want to just take a look at end phase? I can look at end phase. I've been watching end phase and I've been debating with myself whether or not I want to short this because this definitely can see a lot lower. This entire range is, I mean, this expansion. Just look at how large this range is. All right. I do think this can probably at least retest down here. Yeah. Back to 100. I think 100 should be a psychological support for end phase. But this is something I'd watch out for. Cool. And look, you know, trading journals are important. I don't care what type of journal you use. I don't care if you sign up for my journal or you use your own. You use an Excel sheet. You write it down on a fucking notebook. I don't care what it is. You need to journal. Whatever works for you works for you. Okay. This is the journal that I started for the Weeble account. Right. Started with like $74 or something. Okay. I can calculate where did it go? I can look at, you know, my RR. I can look at my future value calculator to give me an idea of my projections, right? These are all the data points for the trades that I took. Today was actually the first day that I took a loss on the Weeble account in the past 5 trading days. So I had a 100% win rate, but now it's 89. Oh well, big deal. And this is just from the lotto that I took. But these are things that you should be, you know, writing down and like writing notes on and all of that. Okay, this is important. This is how you keep track. And then you start to notice mistakes that you're making. You start to notice what you're doing positively with your trading, right? Don't just focus on the losers. That's the thing. You have to focus on the winnings too. Because if you solely focus on the losers, then you're never going to understand what's actually helping you succeed when you're trading. It doesn't make sense to only journal losers. You have to journal both. The losers help you improve on your mistakes. The wins help you improve on your wins. Believe it or not, you know, I'm a big believer of don't fix what's not broken, but I also am a big believer of things that can be improved. Even the little things, right? For example, holding trades longer, having a little more conviction in it, finding better entries, being a little more patient with them, things like that. These are all things that you can find tweaks to when you're looking at your winning trades and journaling them. Same way you look at your losing trades and find mistakes and try to avoid, you know, doing them again. All right. Anyways, that was what I had on that. Knee, you want to look at knee? Yes, this finally played out from a previous watch list. If you guys remember, I actually posted this on Twitter. Where's the chart? Is this? I don't have the chart anymore. It's weird. Anyways, yeah, this is a very, very obvious textbook consolidation reversal. I mean, even if you invert the chart, easy longs, right? Finally broke down from this. Knee is more of a slow mover, which is why you haven't really seen a massive dump on this yet. But you can probably expect down here. The targets still apply from the previous watch list. I don't remember when I added it. Must have been like a couple months ago, or maybe in July. The targets are still valid, unless we already hit all of them. I don't remember what they were. But this looks good for more downside. And going back to that, Knee is a utilities company. XLU does look pretty bearish here. So. Oh, I'm going back to the question I missed earlier. How do you determine which is a pivot level? Well, depends on where we're trading in relevance to my key levels, right? Don't mind my chart. These are all fantastic levels. It all depends on where we're trading in terms of the levels, right? You look at it at a macro perspective. Whoops. You look at it at a macro perspective first, meaning you zoom out, okay? And then you look at it from an intraday perspective, right? And that's how you find your levels. And based on the pivots, the pivot is either going to be support or resistance. All right? It's very simple. Do you guys want to look at some potential opportunities for tomorrow? That should maybe be another 10 minutes. I'll keep it at 10, 15 minutes max. I'm a little bit sad about AVGO. AVGO was something I actually watched over the weekend. And for whatever reason, I completely missed this. or forgot about the move yesterday. The contracts, I was planning on taking 880Cs, and they popped 500% or 400% into the close. I mean, this was a very clear-cut trade to me. I probably should have just posted this for you guys, but this was a very clear-cut trade to me. AVGO, you guys know I've been watching this for a while. Like we've been trading AVGO. We took puts on it recently last Friday, like a couple times, and it's been an interest of mine for a while now. So what happened was that we finally got the test on the GP. Not only that, we have a beautiful bullish divergence here right into Friday's close. Okay, so based off that, those two confluent data points, that's all I really needed to feel bullish on AVGO, plus my entire analysis of the market bouncing this week. So this was a beautiful move. Unfortunately, I missed it. But this can see higher long as it holds above 849. Yeah, this may see higher long as it holds above 849. We have now broken back above this range. So this is what you call an SNR flip, right? Actually here. This is what you call an SNR flip, resistance turn support, okay? So long as this holds. Like you're going to see a move like this. So we'll see with that. All right. So AVGO is still something I want to watch. I have this weird feeling. This is really just a gut feeling that they're probably going to announce a split during their next earnings. I mean, this is a great candidate for a split. But this is purely speculation. This is not based on any fundamentals or anything like that. But it would be interesting if they do end up getting a split. I do have higher targets up here that I put on a while back. So all above 1K. We can take a look at tomorrow's Wednesday. So the only thing we have tomorrow is the video. Okay. Tesla. If Tesla can get back above 234.47 tomorrow, you can probably take longs on it again. Otherwise, this may be a bear flag that's playing out, and your pivot level below is 229.83. That would be for Tesla. This is heavy resistance right around this 230 area, 234. So keep in mind for that. Take a look at BA. I think BA could be a good candidate. Let's see. Projecting the MAs here, right at the fibs and the GP. This low is going to be key. I can mark a temporary level here. And just label it temp. Impromptu temp. All right. This is going to be a key level. If it breaks below the 230 here, you're likely going to see a retest of 228. And if it breaks the high from earlier today. So this is going to be something that you can watch out for. Still some room below. We actually haven't even filled this gap at 214 from earnings. What other names? I'm going to just do it quickly because it's getting a little late. Coin is likely going to structure out for a little bit longer. It does look quite bearish, though. I think coins can see lower under 74.52. Yeah. Unless it gets back above 76.80. But other than that, 74.80, 74.52 is going to be your downside pivot. 76.80 your upside pivot. Actually, not really seeing any real A+ setups here. End phase shorts could play out. I think that's a good one. Meta, I think, needs some time to structure out. Yeah, I'm not really seeing too many A+ setups at the moment. I typically like to wait for the morning to see what the market has done. I do sometimes scan at night just to kind of prep myself for the morning and get an idea of what we can potentially play. But at the moment, I'm not really seeing any A+ setups in my eyes. I think I really want to see what the indices do tomorrow. This is going to be key for NQ, so I'm going to base everything on NQ tomorrow. And obviously ES. Oh, another thing with ES. The bear flag. This could still potentially play out. based on the price action that we saw today, it does look pretty bullish for a bounce, but be mindful of the bear flag down here. So tomorrow, 44.12 is going to be your upside pivot. I believe that's the upside pivot for the hold on. Give me a second. Yeah, weekly upside pivot was 4,400. 44.12 is going to be 44.12 was last week's. Sorry. 44.12 is going to be pretty key. Again, you never want to see something break out of a range and immediately retrace right back under. Okay? You guys have seen this many times. I've discussed this structure many times. If you want this to continue its rally towards the upside, you need this to reclaim to send higher. Otherwise, 44.12 is going to act as resistance and this bear flag is going to play out. Okay? 44.12 is a huge level. We've used this level multiple times in the past. So this is what you want to watch out for tomorrow. All right. Cool. That's pretty much it. I don't have anything else that I want to discuss. If you guys have any questions, feel free to let me know now or forever hold your peace. And also, again, I appreciate you guys joining the stream today. This is my first YouTube live stream, so if you guys do enjoy it and want to see more of it, please subscribe to the channel, the YouTube channel, and like the video. I'm going to try to do these. I'm going to start off with once a week, then I'm going to try to move it to twice a week. Maybe we do like a weekend one to prep you guys for the weekend, pretty much discuss my weekly plan and the weekly watch list. And then we can do a midweek one, either on a Tuesday or Wednesday, just to cover what's been going on, see if there's any changes, and then, you know, prep for the rest of the week. That sound good to you guys? Cool. All right. That's all. Then I'm going to let you guys enjoy your night. I should put out a vote in terms of what I should be naming the series of live streams. It's either going to be charts and chill or it's going to be only charts. I feel like people have done only charts before as a hashtag, but I do really like that. So we'll see. I'll let you guys vote on that. But thank you guys for joining. Enjoy your night, and I'll see you guys.